Well, folks, it's finally happening. Foreclosures are up, and dare I say, they will go higher. Let me explain. Home foreclosures are up 18% year on year. In fact, folks, I would not be shocked if home foreclosures go up another 50%. Why is that? Well, folks, for many years, we have had extend and pretend. We have delayed. We have not allowed the natural process of foreclosures, which unfortunately happen even in the best economies. So we have many years of junk and garbage to kind of flush out the systems. Foreclosures are rising. They will rise more. But let's not pretend like this is 2008. Let me explain. In August of 2025, foreclosures are up 18% year on year, as I've said already. However, what does that mean? What is it compared to? Well, that is exactly 35,697. For those of you that think this might be 2008, well, we did 2.3 million. We did 2.8 million in 2009 and finally had a record of 2.9 million in 2010. And if you want to go month by month, August of 2010, we did 95,364, so roughly 1/3. Again, foreclosures will rise. That will help fix the housing market. There are plenty of bad loans that just simply need to be foreclosed. But again, it will peak and then it will roll over. Goldman Sachs has changed their opinion about rate cuts. Goldman Sachs now expects 3 rate cuts, a quarter in September, a quarter in October, and a quarter in December. Mark Zandi is out with a new recession call. Mark Zandi now says the chances of a recession occurring in the United States are now 48% in the next 12 months. That according again to Mark Zandi. Lance Lambert out with some exciting housing news saying that we have falling prices in the most markets since 2012. Again, according to Lance Lambert, out of the top 200 markets, 38%, which again is a record since 2012, are now showing declining prices. On the flip side, if you want to be a glass half full person, that still means 62% of markets are increasing. According to David Rosenberg, we are in a gigantic price bubble. Talking about the S&P 500, talking about the S&P 500 has never been so richly valued. We are at the highest CAPE ratio on record. We have a labor market that is clearly slowing, and the odds of a recession are rising. And according to David Rosenberg, this is going to take the earnings multiples, or the earnings down, and the earnings multiple down for a double dip smash on the S&P 500. Ray Dalio is out urging investors to prioritize gold over U.S. Treasuries. In fact, Ray Dalio says something I've not heard before. Ray Dalio recommends 10 to 15% of your holdings be in gold. Again, folks, this is according to Ray Dalio. Where are homes selling the fastest? This according to Realtor.com. There is a list of 15. I just got the top 5. The top 5 markets that are selling the fastest. Milwaukee, Wisconsin. Shout out Milwaukee. You are the #1 fastest moving market at 32 days. Followed by Buffalo, New York, Chicago, Illinois, Grand Rapids, Michigan, and Cincinnati, Ohio. All 4 of those coming in at a tied for second place at 37 days. So again, where is housing moving? Definitely seems to be in the Midwest. We have mortgage rates dropping. Again, mortgage rates averaged 6.35% last week, with Friday being a year low at 6.27. The question I have, because this is Fed week, Fed decision on Wednesday, will mortgage rates continue to fall, or have mortgage rates already fallen? If you're looking at the 10-year this morning, last I checked, it was down, so mortgage rates will be falling. Will people initiate rate and term refis? There were plenty of folks that took what I thought was bad advice, marry the house, date the rate. You now have a chance to get out of some of those loans. We do not know how long this window will last. We have been here before. Check out the last three times rates have fallen. The window was not very large. However, my biggest question is, at what rate will we initiate $1 trillion in cash out refis? That is the question. In order to get $1 trillion in cash out refis, we have to keep mortgage rates low. It can't just be a day, a week, or even a couple of weeks. We will need months of low mortgage rates for homeowners to initiate cash out refis. What rate will purchases pick up? Again, we are in the fall season. A lot of the country is starting to get cold, I am hearing. Will purchases pick up? And if they do, when? And then finally, will mortgage rates do what they've done the last three times, hit a bottom, and then V-shape right back to 7%? These are the questions I am asking myself. We do need to talk about stagflation. It is turning out to be a real risk to the U.S. economy. Rising inflation, weakening job market. We could really see consumers once again pull back. The Fed is in a tough position. Again, it's hard to believe that the Fed is seriously looking at cutting rates this week, and dare I say 50 basis points perhaps, when stocks and crypto and housing are all at record highs. It does look interesting. Read an interesting article the other day talking about the American dream. Apparently, the lifetime cost, not 1 year, lifetime cost of the American dream, which includes weddings, healthcare, raising two kids, paying for their college, cars, homes, etc., etc. Total cost for the American dream, $5 million. Yes, folks, according to this survey, $5 million. That's actually up 50% in the last 2 years. Can you say inflation? I do want to shout out some people that bought tickets to the Vegas event. Remember, folks, we are running a special this month. If you buy tickets to the Vegas event, you will get $100 in teachable credits. You could buy the deep dive on Buy Box. You could get the 10-week boot camp. You could even take that $100 and apply it to the big course, how to get started one rental at a time, saving $100. You will also get a call in October, just with the ticket buyers from September. And finally, you will get autographed copies. I am doing something extra for this month because I do want to get the ticket sales sold. And I want to thank Shawnee. She bought 2 tickets, so you will get autographed copies of both books. And Eden, thank you for buying your tickets. Folks, if you bought the tickets this month, I will be reaching out to you probably in the next 48 hours asking for your address so I can drop these off at the mailbox. Again, thank you for buying tickets. Link will be in the description below if you want to come to Vegas and see folks like the Lumberjack Dion, Pace Morby, and many other folks like Jason Hartman and so on and so forth. Mark Zandi earlier told us there was a 47 or 48% chance of a recession. UBS says, hold my beer. UBS says 93% chance of a recession. Yeah, that's not good. 93% chance, according to UBS. And then finally, my last page of notes. U.S. banks are sitting on $395 million in unrealized losses. This again, folks, with banks doing what they call hold to maturity. This could be mortgage-backed securities, could be treasuries, could be lots of things. But again, U.S. banks are sitting on nearly $400 million in unrealized losses. Something interesting to think about is there is $7.5 trillion sitting in money market accounts. The thing that I ask myself is, when does that money move? Does that money move when money markets earn 2%, 3%? When does that money move? Because that is an avalanche of cash sitting on the sidelines. We have gone from a market where people are hopping jobs to job hugging. Yes, this is a term I had never heard of before, but it makes total sense. People are nervous, so they are staying put, and obviously, companies, are also reluctant to let go. So we have this interesting environment where there is no hiring and limited firing. Consumer sentiment, again, reported on Friday, was a nasty number, came in at a 4-month low. Clear signs that the middle and lower income are worried about jobs. They are pulling back. Looks like Canada is trying to take on home affordability. They just announced a $13 billion program to accelerate housing construction. And then finally, the last thing I read about was underwater car trade-ins. This is where you trade your car in and you actually have negative equity. That apparently is at a 4-year high. It's hard for me to believe, but apparently 26.6, let's call it a quarter of all trade-ins are underwater. That is wild to think about. So, folks, at the end of the day, this is the daily financial news. We are flying home, so I had to record this early. Don't forget to join school. $20 a month, 67 pennies a day. You want to be around other wealth builders. And I hope you have a great day. Take care. Later.